Get ready for a high-octane look at the tech world where innovation never stops, and the market is moving faster than ever before. We start with Corning, the optics giant that just took center stage at the International Semiconductor Industry Group Symposium, sparking a massive debate over whether their rapid stock growth is sustainable or if we are looking at the next big leap in AI infrastructure. Investors are currently weighing intense optimism against a fair value that suggests the market might be getting ahead of itself, making this a critical story to watch.
Your brand new iPhone deserves the best protection, and the iLume 3-pack screen protector plus 3-pack camera lens protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
Next, we shift our focus to Taiwan's Semiconductor Manufacturing Company, as major institutional players like Metzler seal. Sohn & Co. AG continue to pour significant capital into the chip foundry giant. It is not just the big firms making moves, as internal leadership is also showing confidence through recent share acquisitions, signaling that the smart money is still betting big on the long-term dominance of this semiconductor powerhouse. The momentum around Taiwan's Semiconductor Manufacturing Company shows no signs of slowing down, with even more hedge funds like HB Wealth Management jumping into the mix. With a consensus buy rating from top analysts and a massive market capitalization, the company remains the bedrock of the global chip industry as it continues to power everything from mobile tech to high-performance AI computing across the globe. Finally, Taiwan Semiconductor is making bold moves in its manufacturing future, announcing a massive roadmap for its A13 chip technology and new packaging facilities in Arizona to tackle production bottlenecks head-on. As the company focuses on efficiency and cutting-edge advancements, we are tracking every update to see how these strategic shifts impact the broader market. If you want to stay ahead of the curve, make sure to hit that like button, subscribe to the channel, and ring the bell so you never miss a daily update. Ever wonder what happens when a tech stalwart suddenly finds itself at the center of the AI gold rush? That is exactly the position Corning finds itself in right now. After a standout performance at the International Semiconductor Industry Group Symposium in Sunnyvale, investors are buzzing about the company's pivotal role in advanced optics. But here is the multi-billion-dollar question. Has the market already priced in perfection, or is Corning just getting started? Let's look at the numbers, because they are hard to ignore. We are talking about a stock that has posted a staggering 298% return over the last year. That kind of momentum doesn't just happen by accident. It happens when the market starts pricing in a massive shift in expectations. Corning's springboard plan is the engine here, aiming for an extra $4 billion in annualized sales by 2026. They are betting big on the optical infrastructure needed to power next-gen AI data centers, aiming to push operating margins toward that 20% threshold. Now, here is where things get interesting and a bit contentious. Analysts have pegged a fair value for Corning at around $139. With the stock recently trading well above that, the math suggests it is currently overvalued. This valuation assumes a high-growth trajectory and a premium price-to-earnings multiple that leaves almost zero room for error. If AI adoption hits a speed bump, or if global trade tensions begin to gnaw at those margins, that premium could evaporate faster than you might think. So, is Corning a must-have for your portfolio, or is the excitement getting a little ahead of reality? You need to weigh those ambitious growth targets against the very real risks of supply chain volatility and execution pressure. Take a closer look at the data. Examine the rewards and the warning signs before you commit your capital. And if you're hungry for more, don't just stop here. Head over to the Simply Wall-Sint screener to hunt for the next hidden gem before the rest of the market catches on. Does Corning have the optics to sustain this rally, or is the future already reflected in the price? Let me know your take in the comments below. Ever wonder what the smartest money on Wall Street is doing while the rest of the market tries to find its footing? Today, we are pulling back the curtain on Taiwan's Semiconductor Manufacturing Company, or TSMC, a stock that is currently at the center of a massive tug-of-war between institutional heavyweights and retail investors. First off, the institutional movement here is fascinating. Take Metzler seal. Sohn and Co. AG, for example. They didn't just hold steady. They increased their position by 6% in the fourth quarter, adding over 30,000 shares to their portfolio. When you look at the landscape, it's not just them. Stevens Consulting, Cedar Wealth, and West End Capital Management have all been aggressively scooping up shares. It seems the smart money is betting big on the chip foundry giant, even as volatility persists. But here is the real kicker. Confidence isn't just coming from the outside, it's coming from within. VP Borzentine recently put his own skin in the game, picking up 1,000 shares in a transaction worth over $55,000. When a company executive starts buying, it's usually a signal that they believe the current market valuation, hovering near that $390 high, is only the beginning. Analysts are echoing this sentiment, with a consensus buy rating across the board. From Argus to Barclays, the upgrades keep rolling in, with price targets stretching toward the $470 mark. With a staggering 46.97% net margin and a return on equity north of 38%, TSMC isn't just a manufacturer. It's a financial powerhouse fueling the AI and high-performance computing revolution. Now, before you go dumping your entire portfolio into TSM, keep this in mind. No stock exists in a vacuum. While the fundamentals here are undeniably rock solid, the market is always shifting. We've seen some top-tier analysts flagging other opportunities that might offer even better upside potential in the current climate. Are you looking to add TSMC to your long-term hold list, or are you waiting for a pullback to get a better entry point? Let me know your take in the comments below, and don't forget to hit that subscribe button for more deep dives into the stocks shaping our future. Remember, in the world of high-stakes investing, your greatest asset isn't just your capital. It's your ability to see the trend before everyone else does. Ever wonder who's really betting big on the future of the semiconductor industry? If you've been keeping an eye on TSMC, you aren't the only one. Smart money is moving, and the latest filings show that HB Wealth Management, LLC, just dialed up their position in the chip giant by over 11%, bringing their total stake to nearly 46,000 shares. But they aren't alone. From Brighton Jones to the Bank of Nova Scotia, institutional players are shuffling their portfolios, showing a clear appetite for the backbone of modern tech. It's not just the big firms, either. TSMC's own vice president, Borzentine, recently put his money where his mouth is, increasing his own holdings by over 12%. When leadership is buying in, it usually sends a signal that they believe the best is yet to come, and the analysts seem to agree. With a consensus buy rating and a target price hovering north of $400, the sentiment remains overwhelmingly positive, despite the usual tug-of-war from firms like Zacks. Let's talk numbers, because that's where the story gets really interesting. We are looking at a market cap that has shattered the $2 trillion ceiling. With a net margin of nearly 47% and a return on equity north of 38%, TSMC isn't just surviving in the current economic landscape. They are thriving. They're balancing growth with stability, offering a solid dividend for those holding on for the long haul. So, what's the takeaway here? TSMC remains the undisputed king of the foundry space, powering everything from your smartphone to the latest AI breakthroughs. While the market constantly fluctuates, their foundational role in the global supply chain is hard to bet against. Still, are they the absolute best play in your portfolio right now? Some top-tier analysts think there might be other hidden gems flying under the radar. If you want to dive deeper into the data or see what else the big institutional players are hoarding, check out the links in the description. Do you think TSMC can maintain this momentum, or are we looking at a plateau? Drop a comment below and let me know your thoughts. Don't forget to hit subscribe for more market insights, because in this economy, information is the only edge that matters. Stay informed, stay ahead, and I'll catch you in the next one. Ever wonder if the chip revolution is hitting a speed bump or just recalibrating for a massive leap forward? Taiwan Semiconductor, the absolute titan of the industry, just pulled back the curtain on its future roadmap, and the strategy is as bold as it is pragmatic. Today, TSM unveiled its A13 manufacturing technology, promising a more compact, high-efficiency future, with mass production slated for 2029. But that is not all. They also confirmed the A12 and NTU platforms, aimed at supercharging speed and slashing power consumption for everything from AI to your next smartphone by 2028. Here is the real kicker. While the world expects every chip giant to chase the latest, most expensive machines, TSM is playing a different game. They are opting to squeeze more performance out of their existing extreme ultraviolet, or EUV, technology rather than rushing to adopt the ultra-pricey, next-gen tools from ASML. It is a masterclass in cost discipline that investors should pay close attention to. CEO C.C. Wei is doubling down on readiness, ensuring that when the market needs scale, TSM is already there. We are also seeing a major push for self-sufficiency in the U.S., with a new, massive packaging facility in Arizona targeted for 2029. By partnering with firms like Amkor, TSM is finally addressing that long-standing bottleneck where chips made in the States still had to be shipped overseas for final assembly. It is a strategic move to localize the entire supply chain. Now, looking at the charts, TSM is still a juggernaut. Despite a slight pre-market dip today, the stock is trading near its 52-week highs, sitting well above both its 20-day and 100-day moving averages. With a 145% gain over the last year, the long-term uptrend is undeniably intact. Even with the current market-wide pressure pushing tech stocks a bit lower, the momentum indicators show that buyers remain firmly in the driver's seat. So, what do you think? Is TSM's decision to wait on expensive new equipment a sign of caution, or a smart move to maximize margins? Let me know your take in the comments below. If you found this breakdown useful, hit that like button and subscribe so you don't miss our next deep dive into the markets. Remember, the biggest wins often go to those who understand the strategy, not just the stock price. See you in the next one.